Hello and welcome to Dialogue. I'm Yang Rui. China's rapid expansion is finally beginning to lose pace. Latest figures show that economic growth has slowed down to 7.5%, and economists are predicting a further slowdown later in the year. So far, the Chinese government is showing little sign of concern and displaying more interest in pushing ahead with economic reforms than short-term stimulus. What are the implications of the slowdown, not just for China, but for other countries that rely on Chinese markets? Should we worry or welcome the slowdown? And what are the priorities for the financial reform? To examine these issues and gaze into the economic crystal ball, I'm joined here by Mr. William Hess, Director of PRC Macro Advisors, and Professor Liu Baocheng from the University of International Business and Economics. Welcome to Dialogue, gentlemen. The Chinese authorities set the growth rate at 7.5, and that caused debates inside and outside China. Should we worry about the decline? That's point A. Point B. What if the target fails to be reached?
Well, I think now the worry is still there. Whether are we going to miss the target of 7.5 by the end of the year? And it seems that the worry is getting more and more justification with the slowdown of our export momentum, and with the sluggish consumers' activity. So what is next? That's something that a black box and many economists are reading into. And of course, the satisfaction here is that okay, the legal economics is going to do more of a laissez-faire approach and allow space for further reform. But so slowing down the pace doesn't mean that we are earning time to gather the momentum or the energy to move forward. So people are really watchful about what is the next step for the government.
The end of your analysis sounds more interesting, I'm afraid. But Mr. William Hess, we are not surprised about the decline of the growth, which continued for 3 decades, and the last 3 decades saw double-digit growth of an average of 10%. This time around, we want to know whether the current lackluster performance of the Chinese economy is the result of the policy option by the new generation of the Chinese leadership.
Well, I think, like any administration, they inherit the policies of the previous generation. That happens everywhere. So, if you look at the past 10 years and increasingly the past 5 years, increasingly Chinese growth has been funded by investment and by issuance of new credit in every form. So, that's a bit of an overhang that they're inheriting. So, the first step, I think, is to find a way to ease out of that and then create space for the next round of reforms and some new areas that'll provide a more sustainable growth into the future. So the question really becomes one of what's the long-term sustainable growth rate for the Chinese economy, and how do you manage the business cycle? Because I think people have become accustomed to the idea that well, China hasn't had a business cycle. It has, but it's been less pronounced. And I think this is really an indication that the economy is maturing and that it needs to go through a short-term adjustment so that there can be a longer-term expansion.
Now, a question for both of you very quickly. Do you think the current slowdown is a result of the business cycle or structural problems?
Well, it's actually both. It's the structural imbalance and also cyclical syndrome of the economy. And now China is more representative of a market-driven economy, so therefore it is showing a typical cycle of economic slowdown. Although we really delayed the pace of happening for example, 5 years behind the United States, but somehow we are mimicking the same pattern.
Let's look at Li economics. That's a phrase coined by 3 economists of the Barclays Capital. Now, 3 pillars support the economics. First of all, no stimulus, deleveraging, and structural reform. But are you sure that when there is slow growth, we won't have yet another fiscal stimulus?
I think that remains to be seen. I mean, those are goals. I think they're talking about the ends that they would like to achieve, but that's not to say very much about the means. I think the means we're going to hear about later this year when there's more policy behind this new agenda. So that's what this administration would like to achieve, and what actually the People's Bank has been trying to achieve for a number of years. So I think there's a lot of space to fill in what the actual details of the policy will be. The signals, I think, now indicate that the first round is going to be financial sector reform, cleaning up the banking sector, cleaning up the financial sector, so there's more room to allow it to play a supporting role once new industrial policies and once a new policy framework comes out. So I think that's what we're going to hear the most about in the coming months. After that, I think there's going to be more about perhaps social policy and how to better support industries.
Deepening
Yes.
the reform is the catchphrase in the current economic vocabulary, but do you think the centerpiece about the reform is, first of all, urbanization, and secondly, is the financial reform? In fact, that encourages us to go back to what Mr. Zhu Rongji, former Prime Minister of China, went through. He's credited with leading China's previous round of economic reform in the late 1990s, when he cut more than 50 million jobs in the state enterprises. Now, do you think we should draw a comparison between Premier Li Keqiang and Mr. Zhu Rongji?
I think pretty much, and also that's the positive sign that I read. Actually, however, the paradigm, China still need to move on a steady, fast course of a market-driven economy. And if we just pump in more of the stimulus to the state-owned companies by producing more redundant stock, that won't really help the economy. So I think no stimulus. Well, even if government expenditure does take place, it should really spend on to pave more of the both physical and social infrastructure, and particularly I think the word is out that it's more targeted to deal with anti-pollution issues. So now you need really to give a very hard time to those spoiled boys, so that they can learn how to play the market role instead of merely relying on breastfeeding.
Turning to the thorny issue of local government debt, well, it could be part of the financial reform. It's reported that 18 provincial level governments and municipalities at the provincial capital level owed 15.3 trillion yuan at the end of 2012. The debts might rise to 16.3 trillion yuan by the end of this year. Analysts say the economic slowdown could stunt the ability of local governments to repay loans. How concerned are you about this problem?
I think a lot of the concern there stems from the fact that there are so many unknowns. I mean, you cited a number about the total amount of borrowing. I think that maybe the actual contingent number might be bigger than that. It's unclear also how it would be dealt with if there was actually default, or if a company would go bankrupt. How do you actually go after creditors? How do they actually go after a state-owned company or a local government? There's not a clear mechanism for that. So thinking about the idea that we raised about the cycle and about the reform cycle, look back before Zhu Rongji started with his major reforms, there was fiscal reform in '94. So part of the imbalances now relate to local governments don't have funding sources for the obligations that are sent to them. So that's been one of the driving factors behind all of this borrowing. So thinking about what's going to come next in the sequencing of reform, I think the reform in the fiscal space is a very important one. That will help to shore up confidence about the ability of local governments to repay their debts, and hopefully we'll get more information about what the actual scale of that issue really is.
I think both the central government and local government need really to work together to redefine, to further define the responsibilities. So right now, the local governments are still measured by their contribution of GDP, so therefore they have to be heavyweight players in the economy rather than simply dealing with social and civil issues. And on the other, that the central government over the last 10 years of reform has been taking honestly more from the local government in terms of the tax split. So therefore, how to allow the local government to have a comfortable fiscal policy So this type of tax federalism needs to be further reviewed.
Since there would be no loan expansion for the local governments, which badly need more financial input into their infrastructure construction, let's look at how local government officials are scrambling to construct subway stations. Now, with the arrest of Liu Zhijun, who has been sentenced to life imprisonment due to corruption scandals, do you think this has sent a very strong signal that there will be a halt to the boom of construction, and that will slow down the local GDP growth rate? What does that mean for the economic prospects?
In the short term, I think should be a slowdown to the pace of investment growth, especially if there's a greater focus on quality. But in terms of the ability for funding these projects, there's plenty of pent-up demand for this kind of investment, and so it's really a question of who's leading it and who are the creditors. So if it's not going to be state-owned banks, I think there's perhaps a way to incorporate more private capital, more investment funds which are coming from private sources. I think just in the past couple of days there have been some ideas coming out of the State Council about railway sector investment funds, which would be not funded by state-owned banks. So there's plenty to do. There's plenty of building, I think, in third and fourth tier cities, but it's a question of how are the incentives structured and who's going to be, how the parties are going to be organized. So it's going to be driven perhaps by the creditors and the sponsors of the projects, and less so by the interests of local governments.
With the suspension of loans to the local governments, do you think many of the subway stations that are halfway through, how can the local governments pay the huge debt without issuing bonds, without having project financing, leases, so on and so forth? They used to depend on the shadow banking, but now I believe there is a mild crackdown on shadow banking. On the other hand, many economists argue that even when you look at the European history, and indeed that in the United States, shadow banking is not necessarily something bad. It could help phase out the current problems one way or another. What do you think of the contradiction here?
I think in the first instance, there has been a general assumption that for municipal credits, in the end, it is the grandparents who is going to take the responsibility, and it is also a reasonable reliance from the individual creditors that the central government will not stand a handoff if there is a problem. And on the other hand, now if the local government are giving a tougher time in terms of liquidity and credit, and they really need to look for other alternatives, although they are not really, there is no really risk of local government collapse or Chapter 11. But those projects are actually, at least to me, most of the projects are really needed. If not needed for this year, it may be needed 3 years down the way. So we really need to give credit to the more of the ambitious projects. So therefore, one alternatives need to be more privatized. So now the government is looking more for private participation into the formerly monopolized areas by SOEs or by the city government. So hopefully there can be more concrete measures produced to motivate or incentivize those private funds to get into those businesses that used to be handled by the city governments.
When we look at the local debts, particularly when you take a second look at the balance sheets of most of the local governments, issues like trust loans, leases, project financing are not there put on the balance sheet. So what do you think of the larger part of below the tip of the iceberg?
Well, I think that's an area where there has been some effort to disclose more about it, but where from an external perspective, I think there's still a lot of question marks about how that debt is going to be serviced, because there doesn't seem to be the ability of local governments to raise funds simply to pay for that debt. It's really a trade-off between one area or another. But if you look back at the end of the last cycle, at the end of the 90s, in addition to closing down SOEs through policy bankruptcies, there was a major restructuring of the banking sector. There were some big numbers at the time to recapitalize the banks and deal with the bad debt that went along with the SOE restructuring. So the big question now is really how do you deal with the excess credit in the system now? And certainly at some point, regardless of what it's called or how it's packaged, there's going to be, there needs to be some way to restructure a lot of this debt to make it more sustainable so it doesn't lead to some kind of big default. So that's an area where I think the communication strategy becomes very important. Try to provide more information to the marketplace so they actually have confidence that the plans can actually be financed.
Thank you very much, gentlemen. You are watching Dialogue with Professor Liu Baocheng and Mr. William Hess. We're discussing the impact of the Chinese economic slowdown. We'll be back in a short while. Stay with us.
We are very confident that growth is reasonably steady, even though it has moderated somewhat, but we are not concerned about a sharp or significant slowdown.
From the outside, looking in, if you were to look at the Chinese economy and say it's growing at 7 to 7.5%, most economies would kill for that kind of economic growth.
China will be a very different economy, no longer manufacturing magnet of all the companies around the world, but the consumption should be rising as a result of much higher wage.
And as long as productivity growth supports the wage growth, we are not concerned about inflationary pressures.
One important response of the government at the moment is to adjust its regulatory system to make sure that the shadow banking sector is also properly supervised, properly regulated. If we have growth numbers that are coming in weaker than we all expect and that are going to be quite bad, then that government stance is tested, is challenged.
Welcome back, gentlemen. At the end of June, interest rates in the interbank market shot up as high as 30%, and China's central bank, the PBOC, refused to inject money into the banking system to bring the rates down. That's what we call the credit crunch. Did you fear at that time that the PBOC's inaction would trigger a banking crisis, or do you think this is a deliberate attempt by Premier Li Keqiang to reform the interest rates?
I think that was a trial run of the Li economics, but it turned out that probably the medicine is too large in dosage. So there has been problem in the financial market, and then this problem is dispersed into many other economic sectors. So therefore, there has to be a more of a Chinese medicine type of approach.
TCM should be employed instead of a shock therapy.
Right. So therefore, the Zhou Xiaochuan has to make some amends. With this. So in the policy direction, there's nothing wrong. Both the economists and many of those enlightened business people welcome this policy, but you cannot just have a sudden halt of the habitual behavior, even if it is questionable. So now it is the how to regulate given the capital ratio requirement, and how to regulate the lending policy. At least they are not really operating in the black box or under the shadow. So to enhance transparency while motivating banks to seek more of the market-driven loans, I think that's the right direction.
Why do you think Premier Li Keqiang refused to adopt the monetary easing policy?
Well, I think if you look at the total social financing numbers for the first at least 4 months of the year, I mean, credit was still pretty much, I wouldn't say out of control, but it was growing much, much faster than GDP. So the economy was still adding leverage, even though growth was coming down, and making it pretty clear that the efficiency of growth was declining, and declining quickly. So I think the overall goal, and we'll see this in the second half of the year, is to bring monetary policy, credit growth, back into line with the overall economy. So that implies a slowdown. So the goal of this, I think, was to reshape expectations for the second half of the year, and maybe to get institutions to make better plans about how they're going to fund themselves in an environment where credit isn't quite so easy. So I think I don't think policymakers would get to a point where they would just kind of pound the table and say enough is enough and suddenly slam on the brakes. That's not, I think, their preferred methodology. But I think it was getting to a point where credit was still growing too fast, and the faster it grows, then the larger the correction that could occur later.
So far, we've been discussing major issues for economists and for Premier Li Keqiang, but what about concerns of the politicians, like unemployment rate? For all countries, I mean, that's a top concern on the agenda. Without exceptions, for many years running, China faces an annual number of 25 million job seekers. This year, 6.9 million university graduates are looking for jobs. What can be done to create enough jobs so that the social stability will be maintained?
Yeah, I think a big difference now, as opposed to 15 years ago, is that the labor situation is much more fluid, where the change in urban employment is really reflected in trends in migrant labor, not so much in long-time urban residents. So the adjustment back then was people who were established in cities working for SOEs, and suddenly they're out of a job. And then after that came the migrant worker phenomenon. So I think it's difficult to gauge now what the actual unemployment situation is, because in some ways it's invisible. Unless you're doing very detailed surveys on the ground, it's hard to tell with the flow of 250 million migrant workers about what the trends in that unemployment is. So, but going back to more directly to your question, I think if you look back at other countries that have made a transition through a time of industrial, perhaps overcapacity, and a slowdown in terms of structural issues, labor markets reforms have been an important part of that, creating incentives for employers to create more jobs and to hire. And so if you look at some of the issues raised even over the past 5 years, businesses are complaining about very high payroll taxes. It's expensive to hire, it's expensive to fire. There's not a lot of flexibility in Chinese labor markets. Now, there's been a move towards improving worker protections, which of course is a good thing, but at the same time, all of the excess costs for these big social programs is putting a wedge in between wages and the costs that employers face. So it becomes pretty costly to take on new staff.
But on the other hand, you see the businesses are really complaining about the rising labor cost, whereas unemployment becomes an issue. It is really a paradox. If the unemployment becomes more rampant, then there should be a less wage asking power. So right now, I think it is really the scale versus the skills of those the workers versus their productivity. So that is more in question. Now, the recent data shown by the UNDP is that China's HDI, which is the Human Development Index, is rather low. It's really below 100 in terms of the ranking. So therefore, much of it is due to the lack of on-job training for those workers. And of course, the other indication is that Chinese universities need to really rethink or even reinvent the wheels for their curriculum so that they can provide the qualified workers or the qualified managers to the job market.
Economic restructuring, I believe, also covers transformation of the industry. For example, a lot of the small and medium-sized enterprises depend on the clean and the green technologies for the innovation and creation of the jobs, and a lot of the university graduates would have to have their chance in that particular area. However, with the anti-dumping and anti-subsidy investigations coming from the US, and European Union is also threatening to do likewise. Do you think there will be more dangers for the job seekers, to be left homeless and to be loafing about in the streets?
Right. Maybe in some of the sectors they will be impacted by trade tensions, but at the same time, I think there's a strong enough support for industries which are part of the long-term strategic plans from the government, or the 5-year plan, that they'll be okay. However, the bigger issue is really one of where jobs are being created and where resources are going, and so. There hasn't been enough talk about this perhaps in the recent discussions, but still, real estate-related investment is a huge contributor to investment, a huge demand for investment, and a big contributor to growth. And that's causing a whole range of distortions where finance and anything associated with real estate is more profitable and more attractive than anything else. So that's where the resources are going. So I think if there's a way to perhaps rechannel resources to new industries which had a lot of promise and provide a favorable structure, that you'll see a lot of new sources of demand for student labor or for more professional labor. So it really comes back to a question of resource allocation, which is another topic behind, I think, recent efforts to try to bring the financial sector back into line, so that they're better serving the real economy and not just serving the interests of this loop of infrastructure and property development.
Right, real economy. Now let's look at the U.S. Fed Chairman Ben Bernanke recently signaled that the U.S. economy still needs further rounds of quantitative easing. But that's quite contrary to what I've heard about the alleged suspension of the quantitative easing. As a result, the Federal Reserve will keep buying bonds. Is the U.S. recovery from economic slump sustainable, and what happens to China and the world economy if it slumps again?
Well, I think it looks rather contradictory. As a matter of fact, that he is still maintaining the preset course of quantitative easing, but by yesterday's press, he was really gaining more flexibility in how and how much he should really manage, and so therefore he set up the conditions for the employment percentage and also their inflationary target. But we always say that when U.S. economy is really sneezing, the other economies will catch cold. So far, the impact has been very profound, both in terms of the financial market in the world and also in the commodity market in the world. And yesterday, South Korea started their own scheme about how to get prepared with a number of ifs if the U.S. monetary policy changes. But I think to China is that technically we may have a chance to make a little more money with our deposit with the treasury bills if they begin to raise the interest rate. And on the other hand, we may also earn the opportunity to push forward. The globalization of RMB with the U.S. dollar is still in the process of getting diluted. And of course, that does not really help the Chinese export to the United States market when the U.S. money is still in the course of a depreciation.
Yeah. He's also talking about what might happen in the middle of next year. So this is more about signaling than actually a shift in policy. So he's talking about reducing purchases in 2014, not next week. So the question this is one that China will face and the world will face is when central banks begin to ease off of these policies. They don't want to have other countries which may have had large inflows get caught short. And so I think they're trying to signal the markets that they should get their expectations in line for that eventuality.
All right, thank you very much, gentlemen. With that, we come to the end of this edition of Dialogue.